This weekend saw the biggest collapse in crypto history. And to make matters worse, today is the end of the crypto cycle. Well, at least that's what the data is saying. I know Bitcoin just hit an all-time high the other day, but according to the traditional 4-year cycle theory, the one that's ruled crypto for over a decade, the bull market should have ended today. This should have been the top. This would have been the euphoria, the blow-off, the moment that everyone's cashing out and calling a cycle peak. It's based on data. If you take the traditional 4-year cycle and you map out the number of days between the halving and the peak, last week's all-time high nailed it perfectly. 1,426 days. But here we are. We didn't get a true alt season. We didn't get a true retail mania. We didn't get that end of the cycle chaos that we've seen every other time. So if the alt map says that the cycle should be over, why are we still here? Why does the market still feel alive? That's exactly what I'm going to show you today. Because as I've said for months, and as macro experts like 𝗪𝗶𝗹𝗪 now agree,
creating a new longer cycle.
The old 4-year cycle is dead. And it's been replaced by a much longer cycle. My name's 𝗪𝗏𝗪, and I've been in crypto for 11 years. That's 3 full cycles. My goal is to build the most profitable community in the world. And today, I'm going to show you why this cycle hasn't ended. And I'm going to show you when it actually will. If you're not already subscribed to the channel, do it now so we can spend the long cycle together and I can keep sharing alpha. Also, if you agree with what I'm saying, just smash the like button. And if you don't, then tell me in the comments why you don't. And trust me guys, I read each and every comment. I told you months ago that this would happen. At the time, the data was showing me that the 4-year cycle was breaking down. And so that's why I stuck my neck out and I made a show that said that this cycle would run much longer. At the time, I called it the ultimate ultra cycle. It's a new cycle that's driven by ultra liquidity and that lasts ultra long. And now the data proves it. Even 𝗪𝗶𝗪𝗪's come out confirming the same thing.
They managed to extend the curve by issuing further out, creating a new longer cycle.
The classic 4-year cycle has evolved, and it's now become a 5 or 6-year cycle. Let me show you why. The first thing is liquidity, because liquidity is the main driver for all markets. Global liquidity is simply the amount of money that's available in the world. And the more money that's available, the more people invest. And that makes markets go higher. Now, global liquidity is driven by governments. When they spend or loosen policy, more money enters the market. And when they tighten, markets drop. The best example of this is the COVID stimulus. Governments printed money for stimulus checks. And when that money hit the markets, well, the markets went up. And then we got inflation. So what did the governments do? They tightened. They took the money out of the economy by selling government debt. When they sell debt, investors use their money to buy the debt, and that money's now out of the economy. And so the markets go down. When the debt matures, the government pays you back the money, and bam, the money's back in the economy. That's one way governments control the money in circulation. And recently, the US government made a small change to its debt. The US Treasury quietly extended the average maturity of its debt from 4 years to 6 years. It seems like a small change, right? But it changes the entire rhythm of the liquidity in the market.
They managed to extend the curve by issuing further out, extended the debt maturity.
Money that was coming back into the market in 4 years is now going to take 6 years to come into the market. And that stretches the entire business cycle and makes it much longer. Another tool that governments use to control the amount of money in the market is interest rates. When the economy is heated and inflation is high, what governments do is they increase rates to slow things down. The higher rates discourage people from spending and investing.
People can't sell a house and refinance because the new mortgage comes at higher interest rates and they're locked in a low rate.
And this slows down the economy.
Went from 190 to 166.
Customers are freaked out, waiting to see how low the Dow.
And on the other hand, when markets are slow, governments reduce rates. This makes money cheaper. And cheaper money means that people take more debt and invest a whole lot more. Historically, markets only top after rates have been lowered and when rates are on the way back up, because this is when the Fed's trying to slow down a previously heated economy. Just look at the data from previous cycles. Bitcoin only tops after the rates have bottomed and when the rates are on the way up, when the Fed is trying to slow down a heated economy. Now look at where we are in the rate cycle. We just saw the first rate cut since Trump came into office. And the data is showing that there's a 100% chance that we're going to get another rate cut in October. And after that, we've got a long way to go until rates bottom, right? In fact, the forecasts show that the rates could only bottom in late 2026. That's when the Fed will complete the rate cutting cycle. And what that means is that we're still very early in this liquidity wave. Historically, risk assets rally the strongest 12 to 18 months after the first rate cut. And it's not only in the USA. Japan recently elected a new female prime minister.
𝗙𝗁𝗫𝗁 is expected to be confirmed.
And her election promise? Pro-tax cuts and pro-stimulus. Then you got China, and China's been ramping up liquidity again. The macro fuel is being poured on the fire, and you can see it in the M2. Global M2 money supply is rising. Gold just hit a new all-time high above $4,000 an ounce. And Bitcoin? Well, Bitcoin lags both of these by 90 to 100 days. And so if the data is correct, we could just see a massive, massive catch-up trade. I made a video about this catch-up trade on the other channel. I'm going to leave a link below. Sometime pretty soon, we're going to get a massive. It breaks down just how big I think this catch-up trade can be. And I think if you watch it, the numbers may shock you. These aren't signs of a top. These are signs that the wave is just starting to build. Another thing that happens before every cycle top is the ISM Index going parabolic. The ISM is a monthly survey of purchasing managers in big manufacturing firms. And what it does is it indicates how bullish the manufacturing sector is about the economy. If it's below 50, they're bearish. And if it's above 50, it indicates that they're forecasting an expansion. Usually in cycles, as the ISM goes above 50, that means that the market is forecasting an explosion. And when that happens, an alt season gets triggered. Just look at the data from the previous cycle. In 2017, the ISM peaked at around 58. And in 2021, it peaked at around 61. Now look at the data right now. The ISM is just starting to move from its lows. It bottomed at around 46, and it's only recovered to about 48. But we're clearly in an uptrend. An uptrend, but we haven't even crossed 50 yet. This means that the real expansion phase, the phase that fuels the big bull market, hasn't even started yet. Crypto cycles end with peak euphoria. In 2017, the Fear and Greed Index sat at extreme greed for 150 days before the cycle ended. In 2021, it was the same. Months of extreme greed, TikTok traders, and NFT mania. This cycle, there's no euphoria yet. The Fear and Greed Index hasn't even touched extreme greed this cycle. Retail hasn't even entered the building. No Google searches, no YouTube views, no blow off top in the Coinbase app rankings. And I mean, just look at the CBBI, that magic indicator that uses 9 other top indicators. Usually, for the market to top, this hits about 90. Right now, it doesn't even come close. And the process to topping, the process can take months and maybe even years. And that's not it. I mean, just look at the altcoins. Market cycles usually end after money flows from Bitcoin to ETH to the large caps, and then from the large caps to the small caps, right? This is the period where the dominance falls off a cliff. In this cycle, we haven't even seen the beginning of the rotation. And if you look at the Bitcoin dominance chart, it's only starting to fall off a cliff now. In 2017, the Bitcoin dominance falling off the cliff took 10 months. In 2021, it also took roughly 10 months. This rotation alone tells us that there could be another 8 to 12 months left this cycle. The last thing that marks a cycle top is the whales. Now listen, I'm going to say the quiet part out loud. Everyone knows that the whales control the market, right? They accumulate when markets are down, and the cycle ends when the whales dump their tokens on the retail investors. If this was the end of the cycle, what we'd see is we'd see mass distribution, right? We'd see the whales dumping their tokens back onto retail. So what does the on-chain data say about this? Well, let's check the receipts. What we're seeing on chain is the exact opposite. Yes, short-term holders are in profit, $11 billion. Some people who bought months ago are taking some chips off the table, and I think that's normal. But look at the long-term holders. They're holding a record $15 billion worth of Bitcoin. And they ain't selling. In fact, they're accumulating. Now look at the exchange reserves. The exchange reserves are at a 6-year low. People are pulling their money off exchanges and into cold storage. This is what a supply shock looks like, not an end of the cycle. This is an accumulation, not a distribution. So where does that put us? Even though we just had the biggest crypto liquidation of all time and the market took a massive hit, based on every single indicator that I've looked at, based on global liquidity, based on interest rates, based on the business cycle or the ISM cycle, this cycle ain't ending soon. In fact, if anything, this cycle has been extended by at least another year or two. And I know it feels really scary right now and that everyone feels wounded, but that's why I think it's time. Because if you're not buying in times like this, when are you buying? I think we need to accept that this is a new kind of cycle, because this cycle isn't being driven by you and me. This cycle is being driven by Wall Street. And Wall Street have an insatiable demand for crypto. In the first week of October alone, ETFs bought $3.2 billion worth of Bitcoin. Between the ETFs and the treasury companies, Wall Street now own 15% of the Bitcoin supply and 11% of the ETH supply. And it doesn't look like they're stopping. Morgan Stanley is now officially recommending up to a 4% crypto allocation to its clients. That in itself is trillions of dollars. And then you got hedge fund managers like the legend 𝗙𝗚𝗪. He went on to CNBC the very day Bitcoin was supposed to top and said that Bitcoin was a very, very appealing asset.
Crypto, digital gold, that's obviously something that's very, very appealing.
Does that mean you're jumping on all of that right now?
Well, I'd want to have positions in all of it,
right,
for sure.
This is not the end of a cycle. This is the early stage of institutional adoption. And the retail FOMO, well, that hasn't even begun yet. If my data is correct, this quarter will see a major repricing as Wall Street bring in their liquidity. But the true, real life-changing money, the real blow-off top, will only be here when the Fed complete their loosening cycle in late 25 or maybe mid 26. This is a much, much longer cycle, and it's a much bigger cycle. And that's why I called it the ultimate ultra cycle. So am I selling? Am I taking profits? Absolutely not. This is the time to be buying. This is the time when everyone's wounded and everyone's panicking. And if you're not buying now, well then what are you waiting for? When will you be buying? The data is telling me that it's too early. Selling Bitcoin now is like selling Bitcoin at 30,000 in the last cycle, right before Bitcoin went to 69,000. This is the time to endure. This is the time to manage your risk and to let the data do the talking, not the fear. Because the biggest move of this bull market isn't behind us. It's about a year to a year and a half ahead of us. And guys, I know this weekend was scary, but it's not the first time in crypto that we've had a scary weekend. I mean, just think back to February when Trump announced tariffs the first time round. Again, we had mass liquidations. And if you would have bought those mass liquidations, well, today you would have 5x'd your portfolio. And look at the last cycle. Remember last cycle's mass liquidations? Remember the Luna liquidation? Remember the FTX liquidation? Well, if you would have bought quality tokens at that time, tokens like Solana or any other tokens, your portfolio would be up 15x even after this correction. Remember, crypto is about buying fear and selling at the end of the cycle. And this cycle doesn't feel like it's going to end anytime soon. Guys, if this analysis helped you see the big picture, obliterate the like button, subscribe to the channel, and I'll see you in the next video. Until then, let's enjoy the longer cycle together, and let's trade well, my friends.